I'm Gary Venner, CEO of IFA Acquisitions, and I'm joined by Anand Senior Tax Manager of Haines Watts, who are one of the top 15 chartered accountancy firms in the UK with over 50 local offices, where we continue our informative question and answer series on our YouTube channel to provide insights into helping buyers and sellers understand the benefits of using brokers for the purchase and sale of IFA businesses, and also from using accountants for sound tax planning advice. The title of the next video is coming up on the screen now.
And are you seeing in particular segments of the market more demand than others at the lower end or the higher end or the mid-tier? What sort of, in your experience, when you're being approached, is it tend to be the bigger acquirers that are looking to?
Yeah, there's definitely been a shift. So what we've had in the past is, the 1-2 person advisor firms would be the sort of the usual sort of acquisition for many of the larger companies that we see today. However, as they have become very often acquired as well, the new owners have decided that they would like to look at higher value businesses. Okay. So rather than getting involved in due diligence on, say, a 25-30 million funds under management business, they would now prefer to be looking at only in sort of in the hundreds of millions. So that has changed. However, there are other advisors equally that have realised that growth is important for them too, beyond organic growth. So there are still those acquirers out there to show interest in the lower end as well. So I would say there has been a change on which acquirers are now involved in what size business, but we have never been busier in terms of the demand for businesses for sale.
That's really interesting, because each sector goes through its own peaks and troughs, and to hear that actually it's a very buoyant sector suggests that actually maybe now is the time, if someone was thinking of selling, to actually put those plans into place.
I think the truth is here that our sector, the average age of advisors is still very high. We are talking in mid to late 50s is the average age of advisors. So there are lots of advisors and advisor firms that are embarking on retirement, and so the supply of businesses is still at a great height.
So Gary, so you've been approached by a vendor wanting to sell their business. How do you go about finding an acquirer?
So the first stage for an IFA acquisitions broker like ourselves would carry out a fact find and get to understand the business owner, the actual business itself, and understand its geographical location. And we would then look at which acquirers either are regionally placed or national acquirers would actually suit that business. And national acquirers usually would have local advisors, either local offices or advisors in that sort of area as well. So we will automatically start to look at which acquirers we feel suit that business. Multitude of things will be considered, and type of clients, type of assets being held, and value of assets. All of those things we will have a good feel. So for our company, we are UK wide, and we've looked after acquisitions in Northern Ireland, Scotland, Wales and England, and all parts of the UK, and so we're very well represented. So again, you're not going to be introducing a business in the southwest of England to a Scottish acquirer, unless of course that business has got offices all over the place, or maybe they do want to expand into other areas.
Okay. So Gary, if you have an acquirer who's looking to purchase a business, how do they assess the potential of that target company or target business?
So, Anand, what we're looking really at there is going to be, what is the true return on investment, not just from a recurring income point of view, because that's we know that already. We know what the level of recurring income is going to be, and that's going to, with good retention strategies, and most acquirers know how good they are at retaining those clients. So that's almost a given. I think it's beyond that, and what gives that extra sort of goodwill aspect of where we push the multiples, of whether that's against recurring income or an EBITDA, and so that acquirer will look at certain aspects there to have the clients got other areas of investment advice that maybe haven't been tapped before. So is there untapped potential in that? For a business that has maybe its own discretionary fund management in-house, then there is consideration of how much more than just the advisor fee charge can that business attribute from those clients. So having it in-house, and having the fund manager charge, the fund of funds charge, can also be part of that. So looking at that price stack within the TER, advisor fees can be typically 0.5% to 1%, but from a TER can be 1.6% to 2%, I would say. So it's giving that business much more opportunity for greater income. Also, I would say it's also looking at untapped potential of who are the clients.
Okay.
Have they been intergenerational? So have we got the children of that will be the heirs to the estate for the older clients? What could be done in that area? Are there other areas, particularly with tax and trusts, that maybe open up new areas there as well? If particularly you've got business owners or executive directors, how has their colleagues been sort of approached? Are there referral opportunities there as well? So it's family, friends, colleagues, all of that. So you start to build a picture in terms of where you would hope that business to be post-sale, with your own sort of proposition around it. And of course, added value, you do need to provide that as an acquirer, not simply that you're going to move a percentage from 0.5% to 1%. What do you give different than what the seller was offering? And it may be that you're providing regular newsletters, commentaries on how the market is doing, keeping those clients informed, and it's justifying that increase. Cash flow modelling, another good area, which is giving the client a much better picture of how they see that their wealth needs to grow to keep pace, etc. So those are the things I think is looking at what can you do with the core business that you're buying.
Absolutely, and you're right. I mean, it's going to be in the acquirer's benefit to not just see what's there and what they're acquiring, but what they can add to it. Yes. And add the value to it, because it's going to benefit them in the long run. Gary, one of the questions we get very frequently, of course, is what's my business worth? We can often help in that sense, so we can do projections, we can do discounted cash flow values. But from your side as a broker, what sort of experience and what sort of knowledge can you bring to that part of the determination? Yeah,
and then I think the fact that coming to any broker like ourselves that are involved with multiple sales on a month by month basis means that we have a really good handle on what the market is doing right now, because the market does change. So what may have been sold previously at a 3 times multiple of recurring income may now have moved towards 4, or may have even become higher. It's about knowing who is attracted to the business that you have for sale, where its geographical location is important, the type of clients that you have, whether they're retail clients, affluent, high net worth, it will escalate in the value of the business the higher the value of clients. And also the type of servicing arrangements that are in place. A great business will be having differentiation there as well, so that clients are used to already of whether they're having face-to-face, the frequency of face-to-face, or whether they're happy to have a telephone or video review. And of course, that's what the pandemic has done. It has changed clients' perception of how that they are quite happy now to be looked after. We have some great acquirers that centralise that process and are very, very good at retaining clients. Again, it's about knowing what suits each individual business. And there will be factors that actually determine whether a business is valued at the lower end, mid-range or higher end. And we're the best people, I think, to be able to give that advice to sellers.
And potentially have difficult conversations with sellers?
Yes, you do sometimes. You do sometimes, because some sellers may hear that a certain percentage is available and think that they're not going to settle for less. It's an interesting aspect as well, because some sellers do put some very high demands. They almost want their cake and eat it. They want the top end, but at the same time they want absolutely nothing to change whatsoever. And it is really important to understand, that it has to be a compromise here between what the acquirer is going to do and what the seller. Also be happy that change can be done very, very well. And the important part here is that the seller is totally behind the proposition of the acquirer. If they believe in it, their clients are likely to believe in it, because their clients have used them for years, trusting that they've always done the right thing for their investments and protecting their wealth. And so it's really important that they've bought in to their investment model, and change can take place. So we tend to align so there's not too many drastic changes, but some change is going to be inevitable.
Understandably.
Make sure that you subscribe to our YouTube channel and switch on notifications so that you won't miss our next video in this series. We provide insight into the tax planning benefits for an exit or acquisition of financial advisory businesses, as well as the benefits of using brokers by two industry experts, me, Gary Venner, CEO of one of the UK's largest specialist brokers in IFA Acquisitions, and Anand Chandarana, Senior Tax Manager of Haines Watts, one of the UK's top 15 chartered accountancy firms.